Evening, everybody. It's 5:20 on Thursday evening, and this is your closing comment video. It is number 1156, and I haven't reminded you in a while, so please hit that subscribe button and the notification bell and help support us. Okay, um, before I get started here with what actually happened today, I want to make a very clear distinction. And that distinction is what you get when you watch the teleprompter readers on CNBC or Fox or really anywhere. Um, and what it is the difference between a reason and an excuse. And I draw the fine line. A reason explains a situation where there is fault and it is recognized and accepted. An excuse, which is what you generally get, exists only to justify or blame or to defend a fault. And that's what I think you're getting. For months, both Dennis and I, and several people in our Discord room, have been talking about the wild, exaggerated overvaluation of a great many stocks. Actually, not a great many, a specific few, really. And those are the ones that drove the market higher. And when that succumbs to reality, it gives us the reason we accept the fault of the overvaluation and we move on and we change our trading habits. The excuses that you get are bullshit. They absolutely rely on whatever the current thinking is. So today, for the market to be down 662 or 1.78%, with over 400 down on the NASDAQ, which was the big loser, down just under 2.9%, was Ukraine. Had nothing to do with Ukraine. Ukraine is a distraction. It's a distraction from inflation. It's a distraction from the screwed up energy policy that this administration has put into effect, taking us from energy self-sufficient to having to beg OPEC to sell us more oil. So I just wanted to make that clear distinction. Okay, so as I said, the Dow was down just under 2%, NASDAQ was down 2.88%, S&P was down 2.12% or $95. The Russell was down 51.22, 2.48%, and the transports were down about 1.95%, just under 300. The VIX, on the other hand, was up naturally, but not to a spike of a high. It closed at 38.11, which was up 382, or 15.75%. Again, I mentioned that it was not a spike high, which on the last bottom that we had, the spike was up to about 38 or so. As far as the market internals, we were 3-1 to the downside on both the NYSE and the NASDAQ. Volume was about average. It's been running 4.1, 4.2. Yesterday it was 4.1. Today it was 4.2. So nothing overwhelming. On the other hand, the Dow Jones Industrials were 5-1 down, 25 down, 5 up, with the only ones up, Walmart on earnings, adding 35 Dow points, and Procter & Gamble, probably one of the most defensive names on the face of the earth, adding 12. The other three were fractional gains. On the downside, we had Salesforce, CRM, taking 77 points, Goldman Sachs taking 72 points, United Health 64, and Microsoft 58. I'm not going to go through the whole list, but you get the general idea. Palantir beat on revenues, missed on earnings. This is a stock that was 45 last year, or possibly 18 months ago. Closed 1397 yesterday, closed today 1177, down 220 or 16%. Nvidia had a beat top line, beat bottom line, and yet the stock was 245.19, down 1992 or 7.5%. You can count on everybody's loudmouth annoyance, Jim Cramer, to come up with plenty of excuses for what happened. No excuses needed for Starbulk, SBLK. They beat top and bottom line. This is a favorite of mine. Not only did they beat, but they also declared their dividend for next month, and that is $2 a share. So in the last 3 quarters, they have paid $4 a share for a stock that today closed 29.80, up 280 or 10%. As I said, Walmart beat. It was the only bright spot, and the stock closed 138.88, up 535. Matterport beat on revenues, missed a little or just in line in earnings, but gave very poor guidance. This is a stock that less than a year ago, actually less than 6 months ago, was 37.60 on the high, closed today $6.54, down $1.38 or 17%. Shake Shack, I didn't see their numbers, but something must have been awry, only because the stock is trading 68.31, down 687 or 9%. Fastly, which makes no excuses for itself. This is a company that was 136 2 years ago when they lost, or 18 months ago when they lost their contract to support TikTok, was as high as 59 this past October. Closed today 1920, down 937 on their miss in earnings, down 33%. And Roku, another one of those let's make excuses for what's going on here. But in point of fact, in July of 2021 was $490, closed today 144.71, down 16.74, and then reported a beat on earnings but a miss on revenue, and again crappy guidance. $130.50, down 30.72 or 19%. Oil was lower by about $2. This chart on the screen is one you should be pretty familiar with. I've been harping on it now for a little while. It's gold, and it broke through to the upside in a big way. Actually closed up $30.50 at 1902 with a 1904 high. I'm going to show you what this actually looks like to give you a perspective. The all-time high, 2089, right here, back in August of 2020. Consolidation after this is the most recent important breakout, so we look for it to hold in this area, which it did 1, 2, 3, 4 times. This is one that Dennis kept on buying every time it got to 1680 or 1700. And today's breakout takes it back up. Now this high close on a weekly basis is 1905.30. So we're pretty close to that, and if we can get above that, I'm going to guess 1950, 1960 is probably in the cards. Bitcoin down $3,275 to 40,000. I'm going to pull up that chart because I have the feeling that that's probably something I'm going to look to be a buyer of, around the 40,000 level, which is where we bought BITO options the last time. We bought them on this drop down here to just over 32,000, 33,000. Okay, this is the weekly. Let's go back to a daily and take a look. Okay, so we broke up to the upside and left a gap. And you know how nature abhors a vacuum, and that's what a gap is. We came right back down to the 20-day moving average, and I'm going to say if we get anywhere near 39,000, I'm going to have to buy BITO calls. Okay, the dollar was up a dime at 95.80, no big deal. The nat gas was lower by 23 cents. Again, I'm going to show you that one only because we still have half a position. We sold half of the position on the 100% up rule the day before yesterday, actually a little above the 100%. I think we got $1.40 for calls that we paid 89 cents for, or pardon me, $1.85 for calls we paid 89 cents for. And all we've done so far in here is come back into support. If we hold this, we broke down here, rallied back up over here, broke out again, gapped down, came right back up and broke back to the upside. So this close at 442.60 doesn't terribly concern me. I wouldn't like to see it go much lower. What I'd like to see is it hold this 20-day moving average, which is 435.90 on the close tomorrow. All right, everyone. Kind of take it to heart about the difference between a reason and an excuse. You really need to be able to recognize what people are giving you when they say they're giving you information. You know, Dennis has an attitude with me about I'll tell you things that are my opinion when they're my opinion, and I'll tell you things that are facts when they're facts. And you just can't really ignore the difference between the two. And frankly, that's what reason versus excuse is, as far as I'm concerned. And it's abundantly clear once you recognize it, you'll trade better. Have a good evening.